Good afternoon, fellow traders. This is Zero Cool from Bullogic coming at you today with our question and answer video of the week. This week's topic will be position size and risk reward. Position size is vitally important to trading. You can't just be all willy-nilly about your position size. You have to know what size position to get into each trade at so that you can manage the risk to your portfolio, which is the number one thing in trading. You must manage the risk to your portfolio. It's not about wins, it's about losses. You have to manage the losses so that you can accept the wins. So we use a little tool to help us determine position size for every trade that we get into. Here, let me show it to you. We call this our position sizer by Bullogic. We also refer to it as our risk reward calculator. And this is an invaluable tool. Basically what I do is I go and I do all my charting. I find all the setups that I like, all the stocks that I might want to play in the morning for the next day, for the week as it is today. And I make a watch list out of it. I post that on Bullogic in the bullpen under Stockyard Watch List. Feel free to check it out. That's at thebullogic.com on the front page. So after I have my watch list, I come over and pull up my position sizer and I plug in my watch list. I put all the stocks that I'm looking at for the day or for the week. They all go into my position sizer. So let's just work through one together. The first one on our watch list is OCLR. I already have this on there, but we'll just go ahead and plug the numbers in together. So basically what we're going to do is we're going to fill out all these Bullogic orange columns, and the white columns will fill themselves in, and these are the ones that tell us if it's a good play and what size and all that kind of stuff. So let's say that you put your portfolio size in this box right here. So I work with a $50,000 portfolio, as you can tell. I use Thinkorswim mostly. For my trading, it's leveraged 2-to-1, so I actually trade with $100,000. But $50,000 of it is my money, and that's what I don't want to lose. So let's say that your portfolio is $10,000. So you plug your portfolio size in here, whatever it is. The next column is risk to the portfolio. So we want to manage our portfolio risk. As you can tell, for tomorrow, all my trades are going to be half positions. I consider one position to be 1% of my portfolio. In other words, if I'm trading 1% of a $50,000 portfolio, it would take me 100 times to lose all my money. All right, but tomorrow I'm going with half percents, which is a total risk of $250. But let's say we were going to trade 1%. That's my normal position size. Okay? I also would not recommend you trading much more than 1% of your portfolio on any given trade. It's just too much risk to take on for any given trade. So keep it right around 1%. On a real good trade, maybe 2%, but I would never recommend more than that. You'll never see me trade more than 2%. Okay, so then we come over here and we find our share price. We get that off the chart, off the setup. We determine that our entry price would be 281, so we plug that number in. Next thing we have to do is find the stop price. This is determined by support of the play that we're putting on, of the trade that we're putting on. So we go down and we look underneath our buy-in price and we look for a good level of support. What's going to stop the stock from tanking if it starts going down? So we found our support level at 273, so we put our stop right underneath of it at 272. Next we have to go find our target price. Our target price is what we expect this stock to do. And you determine that by resistance. Stop is from support, target is from resistance. What is the stock going, if it starts going in our direction, where is the stock going to meet resistance that is going to stop it from going any higher? So that We found it at 305, so we plugged that number in. Now you see, when we plug all of our numbers in, it starts giving us all these other numbers. So first we have a total risk. So 1% of $10,000 is $100. So we're risking $100 per this trade. This is what we stand to lose if it totally goes south on us. That's not bad. You don't want it much higher than 1%. We'll come back to stop loss in a minute. So our position size, we're going to buy, if we decide to get into this trade and enter the trade at 281, we're going to buy 1,111 shares of this stock for a total of 3,121.91. That's what the trade will cost us out of our portfolio. That's what we'll have to put up. We're still only risking $100 though. And then you get to the risk reward. The risk reward tells you if it's a good trade or not. Basically, I don't like to trade any trade. I don't like to enter any trade if the risk reward, and this is a 1-to-1 ratio, okay? So if here we have 1-to-1, it means I'm risking $250. I stand to make, if it hits our target price and goes just how we figure it would, I stand to make $250. 1-to-1 is not good risk reward. Okay, I look for at least 1.5-to-1. That means I stand to make $1.50 for every dollar of risk I'm putting up. That's still not very good. I usually don't even go with that. I'll go with 2-to-1 or better. That means if I'm risking $250 and if the stock takes off and hits our target price, then I'm going to make $500 off that trade. That I can live with. So I like 2-to-1 or better. You know, you come down 4.3, 3.5-to-1, 4.42-to-1, 5.15-to-1. These are much better plays. Oh, here we go. Here's a 0.74-to-1. Now, who would risk $1 to make 75 cents? I wouldn't do it. I'm sure you wouldn't. So this is called managing your risk. You don't want to put up your risk to try to get gains that just aren't worth trying to get. You want more of, if I'm risking $250 and this is a 4.42-to-1 ratio, I'm standing to win, somewhere in the neighborhood of $1,100. So that's more to my liking. If I'm going to risk my money, I want to know that there's something in it for me. Okay. So the last thing we need to do is fill out the reason for the trade. Why do we even like the setup? Usually I'll put the actual setup on there. It's a strong bounce. It's a double break with expanding volume. This just makes it easier for you to fill out your trade journal at the end of the night. And you can also keep an eye on this during the day and refresh yourself as to why you're even watching these particular stocks. The last thing I do is I like to rank my stocks or rank my setups. I rank them in a 1, 2, 3 pattern. Ones being my favorite setups. Ones being the ones that I'm more apt to put a pre-market order in. I put alerts on all my number ones 2 to 5 cents before my entry price if I'm not putting a pre-market order in on it, and that way it'll notify me if it gets close. I don't have to sit there and watch it all day. I'll also put alerts on all my number 2s because they're my second favorite plays. So if my alerts go off, then I can check out the chart and see if it's still a play that I want to enter into or not. Number 3s, I usually just keep an eye on. I'll scan through my charts several times a day. So I keep an eye on them and see if they're doing what I'm hoping that they'll do, and if they do, then they get moved up in the ranking and played or not. So, but I like to just put my number ones. These will be what I'm watching first thing in the morning to go off. Okay, so that pretty much covers our position sizer by Bullogic. Like I said, if you would like to get a copy of this to use for yourself, we highly recommend it. Most traders we find, they buy stocks with the same dollar amount for every trade, which is very poor risk management. They have no idea, especially if you hold stocks overnight, they have no idea even what they're risking. They're risking every penny that they put in. So that's never a good thing. Let me see, what else can this do? I keep this up all day long during trading, during open trading. It's what I go off of for my position size. You know, it tells you exactly how many positions you need to, or how many shares you need to get into for your position, for your trade. So I like to keep this up. It also frees up your hands to do other things. Look for intraday plays, you know, look for option picks, things like that. Manage the stocks that you have, manage the trades that you have open. You know, that's the most important thing, is managing your trades well once you have them open. So, you know, this frees up your time for that, and anything that's going to want you to get in, any trade that you're going to want to get into will be on your watch list. It'll pop off on an alert, and then you can just do it without thinking. You know, it's almost becomes second nature or just instinctual. So I like to keep this up. It lets me know exactly what I'm doing. Oh, another thing it does is because your stop price is in here too, I never put on a trade without putting my stop right in at the same time. I put them both on at the same time. You never find me just buying a stock and not putting a stop price on it. No, that's bad risk management. So another thing it'll do is it takes a lot of the human factor out of your trading. If you put your stops in with your trade price, you already know what your stop is. You don't even have to put it in, but if it gets to 272, sell. It's time to get out of the trade. Take your losses. You know, it's easy to make back 1%. It's hard to make back 10%. You know, it takes a lot longer to make back 10% if you just let it go. So take your loss and move on to the next trade. You know, professional traders do not win every trade that they make. What they do is they work good risk reward, so that they're making $1,000 on a trade and they're only losing $250 on this trade. So they still came out $750 ahead for the day. So, you know, that's just kind of the way trading works. Hope this has been a help to you. Like I said, leave us a comment over at Bullogic.com in the bullpen under the watch list, and we'd be more than happy to send you a copy of this for you to use yourself. All right, y'all have a great evening, and we'll see you all after the close of the market tomorrow. This is Zero Cool signing out. Bye bye.